Now, on the topic of market structure, a lot of people don't know the difference between impulsive and corrective market structure, okay? These are important terms you want to keep in your vocabulary. So when price is super impulsive, it's important that you don't expect a lot of deep retracements, a lot of deep pullbacks to get an entry. This is the type of time where you'd want to set like stop orders, right? People that tend to trade breakouts and like continuations love impulsive price action. Others don't, right? Other people thrive in like corrective price action, okay? Alright guys, welcome back everybody. In today's video, we're going to cover the basics of market structure and the intricacies of how every market moves fractally. It's important you guys understand market structure because it's the foundation of every trading strategy. If you don't understand the way markets move fractally, then you're going to have a hard time doing a top-down analysis and trying to find intraday opportunities within price ranges, okay? So let's take a look here at Aussie dollar, US dollar, and I just want to highlight how the market has been moving recently and how it translates on higher time frames in terms of what I mean by fractally, okay? So let's start on the weekly. When people say markets move fractally, all they really mean is there are multiple candlestick formations within candlestick formations, right? So within this one weekly candle we have here, so this large weekly candle, on a lower time frame, there's going to be multiple candles moving upwards, right? Because that's a bullish candle right here, a bullish candle formation on the weekly. If we drop down to like a 30-minute time frame, what we just circled represents multiple days of price action and multiple candles of price action. So what I just circled here on the 30-minute is basically the same thing as that one candle on the weekly, right? So when people say markets move fractally, they're just referring to the fact that there's more information that you're presented on lower time frames, okay? So what that means for us is that there's going to be market structure created on the weekly, like a bullish structural leg here. As you can see, there's a bullish structural leg and then a retracement correction, right? So on a weekly, yes, this presents one structural leg bullish, but on lower time frames, it's multiple days, multiple hours of price action moving upwards, right? That's what we mean when we say markets move fractally, okay? We can look at this weekly retracement leg and just mark it off with these two lines here. And if we drop to a daily, we could see that this entire bearish leg came to an end here. We created a corrective bullish leg, which ended here. And then we had a bearish retracement leg here that ended here. And then we have another bullish structural leg that's formed, okay? So that's basically what we circled on the weekly. And that's just what I mean when I say that every market moves fractally. No matter what you look at, whether it's a stock, whether it's a forex pair, whether it's a crypto, everything's going to present the same, okay? Different instruments have different tendencies and different characteristics. Some pull back really well, others don't. You'll start to notice this as you trade more and more and you diversify the things that you're looking at. But first is first, always remember that markets have to move fractally, okay? Now, I also want to highlight the way markets create highs and lows. This is super basic stuff. It might be new to some of you who are beginners, but if we take a look here at the 1 hour on Aussie dollar, US dollar, I just want to highlight to you guys what represents a strong low versus a weak low, what represents a strong high versus a weak high, okay? So we can see here that we had an inducement for price to move higher. So we swept sell side liquidity here and we changed directions, right? We have our change of character here. We can mark that out. Now, when we're creating bullish market structure, what happens is we solidify lows each day, right? So this is intraday bullish market structure. I have my session breaks on my chart that indicate a whole day's worth of price action. When we say that there are strong lows in the market, we're referring to lows created day by day that hold weight throughout the week, right? So every single low here, I would consider a strong low based on current price action, right? So we're creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, right? With that in mind, this is the case for bullish market structure. If we were to see the opposite, let's say Aussie dollar, US dollar was bearish, we could flip the chart and now we have strong highs that are maintaining in a bearish scenario, right? So when people refer to strong highs in the market, they refer to strong lows in the market. They're just referring to the highs or lows that are being maintained in a trend, right? So we know markets are either choppy, moving sideways, or they're trending in a certain direction, and that's when we capitalize the most, right? So because these are strong highs in a bear run, it's safe to say that these would be weak lows, right? So we have our strong highs up here. We can mark that out. Why? Because they're being maintained each day that goes by, right? And then we could say here that we have weak lows because those are our target liquidity day by day. So the weak areas in the market are areas that you would want to target, and the strong areas in the market are areas you would want to have your stop loss or a hedge order or any way to manage your risk in case the market changes directions, right? So it's important to note these out. This is just a simple downtrend. You know, in the case that we were moving up the week before, you could say that we would have strong lows that were being maintained, right? So this would be a strong low until the trend changes, right? So our change of character was here. We would say that this was a strong low, this was a strong low, and this was a strong low, right? And our targets would be the weak highs when we're moving up, right? So you see how it changes when the trend changes, right? We just flip-flop between the two. Basically, this is what people mean by strong highs or strong lows in the market, okay? Now, on the topic of market structure, a lot of people don't know the difference between impulsive and corrective market structure, okay? These are important terms you want to keep in your vocabulary because understanding when price is corrective can be super important. Let's say we go to the 8-hour here, just here on AU. I'm going to show you an example. So let's replay price a bit. From this low right here to current price action that we rewinded to, you could consider this impulsive price action, right? So we're here on the 8-hour. Let's go to the daily just to see. So you can see there's like large areas where price is very impulsive, right? So the way AU is moving here, it's not providing much of a retracement, right? We're not getting deep pullbacks to push up. We're just getting like really impulsive price action. We can look at this one candle alone on the daily, right? If we drop down to a 5-minute, because it's so impulsive on the daily, the intraday movements are super impulsive, right? So for example, this push up, it didn't have much of a retracement. It kind of just sat on that support level and then continued in the direction, right? So when price is super impulsive, it's important that you don't expect a lot of deep retracements, a lot of deep pullbacks to get an entry. This is the type of time where you'd want to set like stop orders, right? You could set like a pending stop order above weak highs, as we explained earlier. That in and of itself is a great way to get into the market when it's impulsive, because you could trust that it's just going to continue in that direction. It's not easy to trade impulsive price action for some. I had difficulty in the beginning. For me, I was better at trading pullbacks and less impulsive price action, but everyone's different, right? I see a lot of people sometimes trade like GJ. When GJ starts trending, it's very, very strong, right? It pushes hard in one direction. So people that tend to trade breakouts and like continuations love impulsive price action. Others don't, right? Other people thrive in like corrective price action, okay? So that's just an intraday example of like impulsive price action. We could take a look at some corrective as well. Why don't we take a look at a different pair? Let's go see GJ. Let's see what GJ is presenting. So this is current market structure on GJ on the 4-hour. Let's take a look at some corrective price actions. All of this drop here, we can just mark it out here. This entire drop I would consider pretty corrective. I think on the higher time frames we are overall bullish. Yeah, so we're overall bullish, right? We're making higher highs and higher lows. We can mark this out here. So these are like strong lows in the market, right? And we could consider these like weak highs because they're being targeted. But despite the higher time frame being bullish, we could drop down to the 8 hour here and just take a look at some of this corrective price action. So we're slowly dropping on GJ day by day, right? So this is a big mover, this pair, but it seems like each day we're only moving about like 150 pips at most, right? This was for like the week of April in the beginning. So when I say price is corrective right now, it's because it's very choppy, right? We're not getting super impulsive pushes. We're getting like really corrective movements in the market. And when you see corrective price action like this on a higher time frame, it's usually really easy to trade on lower time frames. So if you're someone who likes to get in on like, say, I don't know, like the 5-minute time frame, we're looking at the 1 hour here. Day by day, there's going to be multiple opportunities for you to sell. If you could recognize that this high is a strong high and that these weak lows are not being held, right? So we're breaking market structure to the downside, as you can see with our quick little markup. We can drop to the 5-minute and just take a look at what price is presenting us day by day, right? So corrective price action on higher time frames works really well with supply and demand. As you can see, let me throw my sessions on just to see where we were in price, right? So like an example would be Sunday, April 9th, right? We had like a very nice pullback into the supply and then we dropped nicely from it, right? So two things when price is corrective. One, you want to be taking profits a little sooner just because you don't know if your position is going to push all the way down or all the way up, right? When price is corrective, it tends to be choppier. A lot of people say like liquidity is being created and manipulated when price is corrective, which makes a lot of sense. You can see day by day with this corrective higher time frame market structure, like we're taking out very liquid areas in the market like this one, and we're like mitigating supply zones to drop lower, right? So this is a clean example of like Asia liquidity. We take the highs in London here, as you can see. We create equal highs moving upwards in Asia, we drop, and then during London we come retrace, take out those highs, mitigate supply, and drop again, right? So for me, when I learned how to trade supply and demand, smart money concepts, I found corrective price action super easy to trade. You know, everyone is going to find a niche in what they prefer, but it's important to know the difference between impulsive price action, especially on the higher time frames, corrective price action on the higher time frames, and how both of them translate to the lower time frames and how you can get into the market intraday, right? So this was just a quick example on GJ, just showing you some corrective price action. As you can see, we go back to the higher time frame, super choppy looking. It doesn't look nice to trade. You got to get down on the lower time frames to take advantage of corrective price action. Okay, so the last point I want to make is that market structure tends to go hand in hand with candlestick formations, right? In the beginning, a lot of you guys are going to be on like baby pips or whatnot. Not a lot of people cover candlestick formations because it's so simple. I want you guys to understand that there's basically 2 candlestick formations that only really matter that you should notice. And that's the doji, right? So this is a doji candle right here. What this represents is indecision in the market, right? So whether you trade supply and demand, whether you trade support and resistance, a doji candle represents indecision on a higher time frame or even a lower time frame. So if you're drawing out areas of like support and resistance and you see this type of candle pop up, it usually means that a reversal is going to occur, right? So besides the doji candle of indecision, you want to also recognize when price creates engulfing candles around market structure, right? So what are we doing here? We created a low, we broke below that low, created a low here, we created another low, and then we created a high, and then we dropped and created another high, right? Basic retail concepts, one could say that this is a double top formation. Recognizing that there's doji candles being formed around that support and resistance area is super important, right? Usually signifies a reversal is going to happen. Even more confirmation, recognizing when an engulfing candle is sat beside one, super important, okay? So candlestick formations tend to go hand in hand with market structure. You don't have to recognize the candle formations. Like some people I know just trade the line chart, which is totally fine. Either way, you're gonna understand like the direction that price is headed, but knowing what the doji candle represents and knowing what the engulfing candle represents is super important. Okay, this is super basic stuff, but some of you guys I feel like could benefit from just a quick run through. Okay, this was a short and quick video. Hopefully you guys gained something from it. If you could drop a like, sub, and comment, I would really appreciate that. Channel's still new, channel's still growing, but we're still working our way up. If any of you are interested in some free resources, I do have a free PDF ebook that's free for everybody out there in the public. You guys just have to punch in your email, hit enter, and then you can download it. It's just a PDF. If you guys are looking for a free community, I do have my free Telegram group, which is open to the public as well. You can chat there personally with me or anybody on my team. We don't post too many trade setups in there because it is free, right? We do have a signal group on the side. But if any of you are looking for a community to join and you just want to ask some general basic questions, we're always there to help. If any of you are looking for education on how to get involved in the market and view the market in terms of supply and demand, understand a little bit more about liquidity concepts and algorithmic theory, there is a private mentorship available as well. We just put up a new website. We're up there on Teachable. If you guys are familiar with the platform, this is where you can run through courses and then join private communities. If none of you care to learn how we trade and you just want to copy our trade setups, you're welcome to as well. We do have the signal group for the CPA brand up on the website too. We share our trades there week to week. We have good weeks, we have bad weeks, full transparency in the group. You could join there, copy our trades, and risk at your own discretion. Okay, thank you to each and every one of you who made it to the end. Happy trading.